hope you're all having an amazing week. Okay. Now, in the last episode, we kind of went over the 4-lane challenge. And the reason I'm doing the 4-lane challenge is because I want to try to educate all of us on what is real out here in this space and what is not so honest. So this week, we're going to kind of go over how I invest my money. Okay. Because like before I'm a crypto guy or automated strategy guy or a swing trader, I'm an investor. Okay. Now, the way I invest for me is kind of like a pyramid, if that makes any sense. The bottom part of it is pretty boring. It's also my largest part, and it's the safest. Then every level up from that point has a little bit higher upside, but with that upside is a little bit more risk until you get to the very top. And at the very top is that crypto. And that's what you're seeing, and it is high risk. But it's also the smallest part of my portfolio. And that's how I'm able to have some high risk and still sleep at night. Because at the end of the day, I've got to protect my family's money and my family's future. Now, I'm going to say this again and again, and I know you guys are going to get tired of hearing it, but I am not a financial advisor. I have a financial advisor, and I recommend that each and every one of you get your own financial advisor. I'm just going to try to show you how I manage the part of my portfolio that I can afford to lose. Okay? Let's get into it.
First, a quick look at the race we kicked off Monday, just days in. And the honest truth is, it means almost nothing yet. Everybody's within a hair of the starting line. This is a 3.5-year marathon, not a 1-week sprint. So we won't dress up a few days as a trend. But keep watching. It's already getting interesting.
These 4 are my favorites in that growth layer. SMH for the semiconductors that drive AI, chat for the AI itself, NUKZ for nuclear. Because if you believe in AI, you have to believe in the power it takes to run it. And QTUM for quantum computing, the next wave. But those are the aggressive side. Not everything up here is a moonshot. I balance them with steadier sectors. Financials, energy, utilities, value, names like XLF, XLE, XLU, and VTV. The stuff that holds up when the hot themes cool off.
And a real-time honesty check. As of today, they don't all move together, and none of them are at their highs right now. The whole growth layer has cooled off its June peaks. Semiconductors took it hardest. SMH broke its 50-day this week as the whole chip sector sold off, and AI and quantum have slipped below theirs too. One practical tip. 2 of these funds trade thin, so Brad uses limit orders. Otherwise, the spread skins you before the market even moves. Here's the pyramid proven in numbers. 5-year return next to the worst drop you'd have had to stomach. The kicker. Over 5 years, Bitcoin and a plain S&P 500 index fund returned about the same. But Bitcoin made you sit through a 77% crash versus the index's 24%. Same reward, triple the pain. And some individual stocks actually trailed the index with deeper drawdowns. Higher up the pyramid, the pain gets worse, and you're not always paid more for it. That's the whole reason the boring base stays big.
Now look, I'm not saying Bitcoin isn't a great asset to hold. If that fits your appetite, by all means, hold it. But for my risk level, playing the cycle and dodging that final 60 to 80% drawdown is how I feel I get the most out of it. That's the reason Lane 2 and Lane 3 exist in the challenge. My attempt at capturing most of the upside, missing most of the downside, and sitting in cash through the bear. The hope is it lands close to just holding, but without the gut punch and without me ever lifting a finger.
And that's a hypothesis, not a promise, which is the whole reason the challenge exists. Maybe the machine captures the upside without the pain. Maybe it doesn't. Nobody knows yet, and the scoreboard settles it honestly over 3.5 years. That's the bet you get to watch.
Meta, Microsoft, Amazon, my boring compounders. I accumulate these on the pullbacks. People call the Mag 7 boring, but it's hard to argue with that track record. and I balance the tech-heavy names with steadier large caps, Berkshire, Walmart, Coke, to keep the whole thing grounded.
And by Brad's own accumulate the pullback rule, one of them is on sale right now. Microsoft's down about 30% from its high, still near the bottom of its range, while Meta and Amazon have already climbed back much closer to theirs. And Brad's own indicator, the Cox Almanac, logs a buy edge on Microsoft that wins 59% of the time, over 654 samples. Its sell signals only work 37%. On a great compounder, buyers have the edge and sellers get punished. But that's Brad's rule for Brad's money, not a signal for you. Cheap can get cheaper, and a 59% edge still loses 4 times out of 10.
Now let's talk swing trades. I only do a few. I have to recognize the setup, do my research, and buy it at a value. And I set my exit before I ever buy. And to be clear, I'm a swing trader, not a day trader. I hold for weeks, even months. I can't be staring at a screen all day. I've got a farm and a smoker. Hood. I watched for a long time. I accumulated just under 70, averaged around 72, and the day I bought, I set a sell at 100. It hit 100, I sold. It's up around 110 now. Could I have made more? Sure, but you can't time the top, and it's never a bad time to take profits.
That's a 39% swing in under 2 months, booked to plan. Clean ascending channel, the almanac laddering buys up the trend, and the 50-day average sits right at $90. Exactly Brad's re-entry zone. He won't pay up above his own $100 sale. Disciplined, not greedy.
Zscaler, cybersecurity, and I love that theme with quantum coming. I bought at 126.61, and I said I'd take profits between 150 and 170.
Here's the honest, real-time part. The morning we built this episode, Brad said 150 to 170. That same afternoon, ZS jumped 7% to 152, and he sold up 20% at the low end of his own zone. 2 swings now, both called before the outcome, both booked to plan. And note this, ZS beat earnings every quarter, while the stock fell 58%. The business didn't break. The price just got expensive and reset. Down and broken are not the same word.
SOFI, I bought around 1577. The market treats it like a crypto stock, but it's a whole bank. Lending, a tech platform, financial services. This one I might just keep. And here's something I really look for. Is the owner buying his own company? SOFI's CEO he put about $250,000 of his own money in recently, right before earnings. Who knows the business better than him? That's not a guarantee, but it's a breadcrumb.
And it checks out. It's actually bigger than Brad remembered. From the filings, SOFI's CEO made 5 open market buys this year, about $2.25 million of his own money in total, the latest around $250,000. And he paid up for the recent ones, $18 in June versus $16 in May, a few weeks ahead of the July 29th earnings print. Adding into strength, not bottom fishing. Insiders sell for 100 reasons. They buy for only one. And SOFI made the same falling wedge bottom that ZS did. Patterns rhyme. Hood and ZS were rentals. SOFI, Brad's marrying. Same skill, different intention. Here's what makes Brad's almanac different. Every signal carries its real track record on that exact chart. Microsoft's buy edge, 59% over 600-plus samples, trustworthy. Hood, 65%. But SOFI's buy edge, 49%, a coin flip, and the indicator says so. Most tools scream buy at everything. This one tells you when it's guessing. That's not a crystal ball. It's an honest edge.
And here's the honest truth about how I work with all this. I don't always listen to the data because I'm human. But the AI can hand me the honest analysis so I make better decisions. That's how we work as a team.
Quick education. A day trader is flat by the close. No overnight positions, glued to 1-minute charts. A swing trader holds days to weeks. For a quarter century, day trading had a gate, the pattern day trader rule. You needed $25,000. That gate is gone. This June, the SEC and FINRA eliminated the $25,000 minimum and the pattern day trader label entirely. The wall fell.
Right now, I'm quietly selling into these runs and building cash. I think Bitcoin's got one more low in it this cycle, so I'm patient. You can't buy the dip without capital. And here's the farmer in me. My dry powder refills after harvest. So this fall, I'll have more to deploy right about when I think Bitcoin might put in its low. Patience isn't hard when you know more's coming.
That's dry powder with a plan. Brad's watching coin to accumulate on the next dip, and Hood only below his old $100 exit. He won't chase his own sale. One honest caveat: holding cash for a dip is itself a bet. If the low comes, he's ready. If it doesn't, cash is a drag, and he buys higher. And a timing note: SOFI, Hood, Coin, and MSTR all report earnings the 29th and 30th of July, right after this drops.
So that is my pyramid. That's my whole house. It's a boring base with a little bit of risk stacked on top. Because before I'm a crypto guy, I'm an investor first. Okay? The crypto is just the cherry. The boring part is so that when it comes time to retire, no matter what, we're still eating ice cream. So, thanks for keeping score with us. Oh, I was going to tell you guys too. Today in the 4-lane challenge, Claude made another trade. Now, you'll have to tune in next Monday to find out what he did, and I've got a feeling he may have to invest some more in the morning, and I'm curious to find out what that'll be. Hopefully by next week, I'll have a running scoreboard that'll be 24/7 that you can click in on, and you guys can follow along anytime you want to, anytime you want to see if Claude made a trade, or if I made a trade, or one of my strategies decided to buy, or whatever. We're going to try to keep it to where you guys can always have access to it, even if you don't have time for the videos. So do me a favor, subscribe, hit the like button, leave a comment, and I'll see y'all next week. Before we go, I need to be clear. We are not financial advisors. I have my own, and you should too. Everything we do is with a small slice of money we can afford to lose. Crypto and the markets are very risky. You can lose all of your money. And we will never, ever message you in the comments about opportunities. If someone claiming to be me does, it's a scam. Report them.